topic. Cyndi, before we jump in, do you mind providing a little bit of context on yourself and on Bookskeep as a practice?
Sure. I founded Bookskeep in 2014, and we started focusing on e-commerce in 2015. At the same time, we were also diving in with Profit First. So we are an accounting firm. We do e-commerce bookkeeping, but we also do Profit First advising. And Profit First is just a cash flow methodology that works really well to help you manage cash in your business and not get any surprises. And then we also do e-commerce advising, things along inventory, product profitability, etc. So that's really the suite of services we provide.
And what's fantastic, especially about today's subject matter, is that a lot of the businesses that come to your practice today, I'm assuming, are using cash basis accounting or potentially nothing. So you like, one of the big parts of your role is to help them understand what are the pros and cons of each accounting method and what's usually best suited towards their business. So deep expertise in today's topic. Yeah,
that's right. I mean, to me, it's good to have your accounting done, but it's also good to really understand what it means and what the information is telling you, and to be sure that it's set up in a way that's giving you good information.
Fantastic. So let's dive into today's agenda and what we're going to try to cover over the next 45 minutes. First and foremost, we'll take it kind of a level above each of the individual accounting methods and talk about why picking the right one is actually more important for your business than folks might realize. We'll then jump into each of the different accounting methods that are available to you today, the pros and cons for each, and then what types of businesses are best suited for cash or modified cash or accrual. And then after you kind of get a good picture of which accounting method is likely best for you based on your business's characteristics, we'll talk about the next steps required to help you get from where you are today to where you'd like to go from an accounting perspective. And then, as mentioned, we'll jump into the Q&A, but Amy is monitoring it right now. If anyone has any questions, we will dive into it wherever relevant. So I'm just going to bring this up to the group, right? Before we even get into accounting, a few key stats here that I think help shape the narrative on why accounting in general is incredibly important for businesses. But did you know that 32% of e-commerce businesses fail because they run out of cash, 29% fail because of cost and pricing imbalance, and many businesses fail because they try to scale too quickly? The source on this is Small Business Trends, but it's one that you can kind of see from multiple different statisticians. It kind of hovers around the same margins in terms of percentages. Cash flow is incredibly important to the success of a business, and in a lot of ways is why many fail or succeed. Cyndi, do you want to provide some additional context here?
Yeah, it's the biggest challenge that I think it starts out from day one when people decide to go into business, into an e-commerce business. The first thing they have to do is figure out buying inventory. And very often they spend all their money buying inventory, not realizing that they're going to have to turn around and buy a second round of inventory before they really sell through everything, just the timing of shipping, et cetera, manufacturing. So from the very beginning, cash is a barrier for a lot of e-commerce businesses when they get started. And it's true, most businesses fail within the first 5 years, and it's because they run out of cash. It's the number one reason for all businesses for why they have to shut their doors.
And you know, what's funny is, knowing our audience, I'm sure that none of these statistics are surprising to them, right? Because they're in the nitty-gritty of it on a day-to-day basis. But even if you know the statistics, when you know it's first party and it's happening to you, many don't even see it coming, because one of the core topics, one of the core points of today's topic is it's because they don't know their numbers. And one of the reasons why they don't know their numbers is because they aren't accounting at all, which we see from time to time. They're using the wrong accounting method for their business, or generally speaking, they're doing it incorrectly. Cyndi, just do you mind for a second taking stock of the e-commerce businesses that come to your door and categorizing what percentage fall within each of these categories?
I think the first bullet there, those that aren't accounting at all, It's the small minority. It used to be more than it is now, but I think more people are in the e-commerce space are realizing the importance of it. So it's a small percentage, maybe 3 to 5%. I would say the bottom one of or accounting incorrectly, that's a much higher number, somewhere in the 70% or so, where they're just not taking stock of Amazon deposits or whatever in the correct way. And many of them are using a cash-based method, which is not giving them the best information for managing their business for growth, for understanding profitability. I would say probably 20-25% are in that bucket.
Awesome. I'm actually going to pass the question over to the group to get an understanding of where the audience is currently at, and help frame some of the discussions that we'll have a little bit later in the presentation. So I've just gone ahead and launched a poll, and I'll give folks a little bit of time to put in their answers. But effectively, it's asking, what accounting methods are you using? Option number one, don't really do accounting, which kind of falls into aren't accounting at all category. Cash basis accounting, accrual accounting, combination of cash and accrual, or your accountant or bookkeeper is currently handling it. We're seeing some of the responses come in. I'll give it another 10 seconds before ending the poll. Cyndi and Amy, are you seeing some of the responses from this poll yet? I'm really excited to showcase this to all of you. We're getting most of the people that are participating in the webinar responding. Appreciate you all doing that. Going to go ahead and end the poll now, and I'm going to share the results. So can everyone see? Mm-hmm. Amazing. So that first category that you were talking about, Cyndi, that aren't doing accounting at all, kind of falls within the range of what you would see at your practice, into the minority. Many are doing some accounting, which is what we usually see with cash basis accounting, which we'll get into in a little bit. And then there's a few folks that are doing accrual and a combination of cash flow accrual, which are two other accounting methods that we're going to talk a little bit about further in the webinar. And then last but not least, some are working with an accountant or bookkeeper. Always a great idea, especially if they're specialized in e-commerce. Cool. Thanks everyone for filling in that poll. Very helpful context, and quite in line with what you were mentioning 2 seconds ago. So why is accounting important at a high level? Kind of bringing it back to the number one item in our agenda. Like, we talked about the high level details of why businesses typically fail. It's because they don't have cash flow visibility. Cash flow is a big part of the equation. How do you get good cash flow visibility? Well, accounting is a core component of that. But there are other really strong benefits to accounting, and why picking the appropriate accounting method helps you achieve these. Confidence and compliance, I think, goes without saying. Helping you pay the right amount in tax, helping build more profitable businesses. When you have line of sight into your business and how it's actually performing financially, you can make the right decisions for the business and help it become more profitable. Attractive to buyers is a really interesting one, and I think it lends itself really well to today's conversation, because depending on the accounting method that you pick, you will be more or less attractive to buyers. Cyndi, do you mind actually providing a little, because I know that you have a lot of anecdotal evidence on this based on some of your clients. So do you mind talking about it a little bit?
Sure. We've had, from 2021, 2022, there were a lot of sales that went on with our clients. And one of the things that the buyers, brokers were always doing is the due diligence process. And they were always wanting to be sure that they could have confidence that the books as they were presented were a reflection of what's really going on in the business. So we had many people come to us during that time to get their books set up in a way that they could demonstrate profitability. And what our clients would tell us as they went through this process was that if their books were in order and they were really confident in their numbers, they got a lot less questions from potential buyers, and they were able to be more confident in their answers. And they said that that gave them a better place to negotiate from, to receive higher offers. unfortunately, we had a client that couldn't defend their numbers. The inventory information just was not there to back up their information. We worked with them to get it as close as possible, but ultimately a buyer walked away because they just they perceived that there was risk in buying that business because they couldn't feel comfortable in the numbers.
And that happens across many different industries. Like I have firsthand experiences of deals falling through in software because the numbers were a little bit squishy, as you mentioned earlier. So attractive to buyers is incredibly important, especially when picking the appropriate accounting method for your business and your stage of growth. Less risk, like you can slice the less risk pie in a multitude of ways, but like knowing what your profitability looks like on a month-to-month basis helps you better plan for the future, helps you avoid pitfalls, less risk. We'll talk about this a little bit later, but like profit first and having more cash on hand is also incredibly valuable. Cyndi, you had a client, I remember that we talked about this a few months ago, but Amazon lost their inventory 3 times. Other businesses who, didn't have appropriate accounting in place, who weren't using profit first methodology, could have ran out of business, but with this particular client was able to weather the storm and eventually actually sold their business, right?
Yeah, she had a really nice exit, but early on she ran into that really unbelievable situation of having bought inventory, having it lost 3 times. Luckily, she had a dollar set aside to buy inventory a second time. She had profits set aside, so she was able to use that as a rainy day fund to buy inventory again. And then she got her account suspended in the middle of all of this. So it's just like how much bad luck can one person have? But by really understanding her numbers, by having her cash available for preparing for a rainy day, she was able to go through what would just be unbelievable circumstances and would put a lot of people out of business. She was able to weather that storm and be in a position to, when her account was restored, to be able to sell through all of that product. And ultimately, she didn't have anything major like that happen again. She had really strong financials, and she had a successful exit this past year. And her financials set her up for being able to not only weather the storm, but then to sell the business and move on to the next thing in her life.
Totally. And last but not least, I think is the one that goes without saying, but better performance visibility, like knowing your numbers is all about understanding how your business is actually performing. And what I think is interesting and how A2X specifically has seen the conversation shift over the last few years, 2020 and 2021 were the years of growth at all costs. Numbers were almost an afterthought because, obviously with lockdowns and with stimulus, like everyone was purchasing online. So more and more e-commerce businesses were spinning up, and it was like, how do I attract and acquire as many customers as possible? We're now, as kind of things have gone back to normal, e-commerce is a more realistic percentage of retail. I think businesses have shifted their focus now to better line of sight into their performance and profitability. Profitability is something that keeps coming up time and time again. And I don't think you get to profitability without solid accounting. So we're probably beating a dead horse here in terms of why accounting is important, but it's something that folks always, I think, overlook, but it's so critically important to the success of most businesses, specifically in e-commerce, because you're dealing with so much complexity.
Yeah, if you don't have the data to really know if the changes you're making are impacting your bottom line or your top line. I mean, we talked earlier about advertising and the ability to understand if your advertising is working. If you don't have the ability to look at that data and understand how the levers you're pulling are impacting your financial success, you're working with a blindfold. So the numbers give you that line of sight.
Awesome. And talking about line of sight, right? How does that really translate, from a high level of accounting? Like, what does that translate into when you're doing accounting well and you're deploying the right accounting method? Usually it's your financial statements, things like your profit and loss and your balance sheet. Cyndi, do you want to talk through these documents a little bit and why it's important?
Yeah, the profit and loss, I think, is something that most people are familiar with. And for those that aren't doing accounting with an accounting system like a Xero or a QuickBooks Online or something like that, you may be using some of the other products that are out there that give you a dashboard and that would also give you a profit and loss. And those tools are really useful to getting close, if you will, but they're not necessarily something that you can count on. And it's one of the things that I see when people come to us and they've got this perception of how their business is performing from these tools. And then we go through and get them started on an accounting system and provide them a balance sheet. What they see is that those numbers that they've been relying on don't always add up. Those dashboard type tools recognize revenue a little bit differently, and they also are never reconciled back to an outside source like a bank statement. If you have a full accounting system with a balance sheet, you're going to get that reconciliation back to the external source, and that lets you know that you can count on what you're seeing in your financial system. And people get confused about what they're seeing with the profit and loss, and do they even need a balance sheet? Well, I want to explain that they're two different things. They give you two different windows into your business. First of all, the profit and loss is for a specific period of time. It's for the year. You see what's going on in that year's time frame. Whereas the balance sheet gives you insight into your business over time. It shows you how the business has performed over the years that you have owned the business. And it gives you some insight as to, is your business growing in an appropriate way year over year? You're investing your time and your effort into it, just like you might invest dollars into, into the stock market. Are you getting that return? And your balance sheet helps you see whether you are or not.
Quick question for you on these financial statements that we didn't dig into a little bit earlier, but when you're dealing with external parties like a bank for a loan or an investor or a potential acquirer, are either of these documents more important than the other? Do you need both? What's the mix?
They want to see both. They want to see how you're performing with profitability, but they also want to see how strong your balance sheet is for you may look really good from a profit and loss perspective, but you may be relying on too much debt, and that debt is a factor. Whatever debt you're carrying is a factor from the bank's perspective, as if they're willing to loan you more money for that business.
Totally. And I would imagine that most people that are coming to your doors and looking for accounting services, likely familiar with profit and loss, maybe not have a balance sheet as of yet.
Yeah, I think the balance sheet is less familiar, they're less comfortable with it. But it provides such important insight that's one of the things we want them to understand, because as we talk today, we'll talk about inventory and inventory being recorded in the correct way to give you insight into your business. Your balance sheet comes into play in that situation.
Fantastic. Okay, so let's now start to dive into the accounting methods. We've been peeling the onion, right? First and foremost, we've been talking about why cash flow is so important for businesses and understanding your cash position. And the way that you do that is through accounting, and then why accounting is so important just beyond that, that cash layer. Now, to do appropriate accounting, what are the accounting methods that are available to us today? I'm sure that a lot of people here are familiar with cash and accrual. Cyndi, do you want to just provide a quick high-level overview of these, as we're going to dive in a little bit deeper shortly?
Right. Cash is simply when money changes hands, it's recorded in your accounting system. So if you get a deposit in your bank account, or if you use your debit card, when that activity happens is when it's recorded in your financial system. Accrual is based more at when the value changes hands. So when if someone places an order at Amazon, for example, and that order is shipped, that constitutes a sale that can go on your books, even though you may not have received the cash for that item yet. So it's when the value changes hands as opposed to when the cash changes hands.
So when we look back at the poll that we did a little bit earlier, the majority of folks on today's webinar are doing cash accounting. Some are doing accrual accounting. But there was a third option there, and it looked like a little bit of a minority were doing a combination of the two, and that's modified cash. Do you mind providing a high-level overview on modified cash?
Yeah, it's to me kind of the best of both worlds, because it allows you to do your accounting at for revenue recognition and recording the cost of goods sold based on the accrual methodology. But you don't worry about accruing everything that's at the operating expense level. Things like insurance, maybe rent. You don't get so tight about trying to figure out how that might need to be done on an accrual basis. And if you're not worried about that, that can ease your burden of keeping up with your accounting. It can be less costly for you. It allows you to pay attention to the stuff that's important without getting into the minutia of accounting for everything on an accrual basis, which gets to be more complicated and more expensive.
Awesome. So now what we're
Hey
going to
guys, we've actually got a
ahead.
question, and it might make sense to either answer it now or you might want to touch on it as you cover each of the different methods, Cyndi. But the first one is there a method for scaling given the amount of cash one has access to?
A method for scaling. I'm not quite sure what's meant by method for scaling.
So I think, sorry, accounting method. So I think is cash better for scaling, or is accrual, or is it blended
yeah,
both? So
accounting method. Okay, got it.
yeah, sorry.
What we're talking about, duh. Okay.
Yeah.
I think the modified cash method is the one that will allow you to scale with the correct information, so that you can make good decisions without being overly complex and burdensome from an administrative perspective. And that's really what we're going to go into a lot of detail about. But to kind of be the spoiler alert here, modified cash is the thing that to me gives you the best of both worlds in terms of good visibility from your accounting data without all the burden of extra costs to keep up with things.
Which is nice, right? Like we're about to dive into the topic, and instead of just telling people the end, like, hey, do modify cash, we're going to show why, right? Which is quite nice. And again, also accounting method is dependent on each individual e-commerce business's circumstance. Sometimes a different use case requires a different method, and obviously it's always great to connect with an accounting expert to help you make those selections. But to Cyndi's point, this presentation is quite biased towards modified cash, and you'll start to understand why as we dig into each of the methods, their pros and cons, and what types of businesses are best suited for each of the methods. So just a high-level recap on cash. For e-commerce sellers, sales are counted when the settlement comes in from the platform. For example, if you sell on Amazon, you only record sales once the money has come into your bank account, and this also applies to expenses. So that was the example that Cyndi provided. Some of the pros as to why cash is good. Cyndi, do you want to jump into each of these bullets, and then we can, do the counter and talk about why cash might not be the best?
Yeah, I mean, I honestly love cash from the standpoint that it's really simple. And one thing that you can do is look at your financials, and it reflects what's going on in your bank. And I always think that's a good thing to have those things line up. But the reality is it doesn't take as much effort to do, but there's some limitations as well. And the limitations that we see are you're not going to get the level of financial detail that you're used to, that you need to make good decisions about profitability. We talk about how it's not scalable. As your business grows and gets more complex, the financial method of cash accounting just doesn't meet the level of complexity that's actually going on in your business. And the biggest challenge is that the revenue is not being recognized necessarily in the period that it occurred, and it doesn't match up to the cost of goods sold to that same period. So you're not able to really understand profitability. And one of the things that we see from clients who haven't been doing accounting or have been doing cash accounting, and they come to us because they're ready to do an exit, and their brokers have told them, you have got to get these books on an accrual or modified cash basis because buyers are not going to accept cash. So in the long run, cash is not going to get you where you want to be if you've got an exit in mind or if you've got scaling in mind.
And then this is probably something that most of those that are doing cash are familiar with, the profit and loss statement for those on the cash basis. But Cyndi, do you mind providing a high-level overview of what we're looking at here?
Yeah, and I know it's small, so I'll fill in some of the gaps. What we're seeing here is, let's just look across at the income for January, February, and March. You can see there's about 1.8 million in income in January compared to 1.2 in February and about 1.3 in March. And this is a situation that we see a lot where a client that has been using cash-based accounting, they have Amazon, they're reporting their revenue correctly when Amazon is doing their payout, but Amazon occasionally does payouts 3 in a month. So they're working on an every 2-week basis, and just the way the calendar lines up, in January, this particular client got an extra boost in their revenue in January. And if you look right below that for cost of goods sold, you see that there's none in January. So when you buy your product in cash-based accounting, you record the cost of goods sold in the month you pay for the inventory, but then you may sell it through for several months. And as you do that, you will have months where maybe you don't pay for any inventory. And that's what happened for this client in the month of January. They had a big payout from Amazon because they probably got some Christmas money in there. And then they had an extra third payment in the month. They had already bought all their inventory in December, so they didn't buy any more in January, knowing things might be slowing down. And as a result, they had a really great net income for the month of January, but February and March were negative. And so what this demonstrates is that if you're not recognizing the revenue as it happens in the month it happens, then you get these wild swings based on when Amazon may send your deposit to you. And if you're not recognizing your cost of goods sold at the time in which you're making the sale, then you have very little data to be able to understand your profitability. And you have these wild swings in your profit and loss that show you, that you just don't have data here that you can use to manage your business.
And what I think is interesting, you talk about one of the pros of cash accounting earlier, which is the lower administrative burden. But let's say you get to this point and you see these swings and you're like, man, I just need better visibility. I need to understand, how my advertising costs are cutting into my margins or whatever. And you have to dig into that. Well, guess what? You're doing admin on the back end, right?
There's a cost there too, right?
Exactly. So I always find it interesting when I'm seeing this. It's like you always, sometimes picking the simpler route, you always tend to pay for it a little bit later on the back end when you need to kind of dig in and get the financial visibility, or you end up like some of the businesses that we talked about earlier, using kind of those small business trend stats where, line of sight into cash flow becomes a core issue and profitability isn't as big as you thought, or so on and so forth. So I guess we keep coming back to this theme, but visibility is incredibly important, and picking the right accounting method helps you achieve that level of visibility without more administrative work on the back end. Also, the idea of real time, right? You get it more on a real time basis if you're planning it out on the front end versus doing the audit on the back end to see what's going on.
Yeah. If you wait till you file your taxes, it's a little too late to be making decisions for how things are going to go for you for the year.
Totally. So let's talk a little bit about who cash accounting is best suited for. So do you mind providing us with a little bit of characteristics of what type of businesses this method is probably the perfect partner to?
Yeah, if you're just getting started and you're not sure that this e-commerce thing is for you, and you're just wanting to see if your product is even going to flow, or if you're going to have the time to manage it, cash-based accounting is a good way to go. But when you see something start to take off in terms of product sales, or you realize, I'm enjoying this, I'm thinking this may be a career path for me, I'm going to work this up until I can quit my day job. At that point, it's good to move over to something a little more sophisticated. If if you are in a business where there's very little delay between when you buy your products that you're going to sell and then actually sell them and get the cash for them, restaurants are a good example. We hope that if they buy food, they're going to turn it into something we can eat quickly, and
Fresh.
they don't need to carry a bunch of inventory for long periods of time. So cash-based accounting can work for them pretty well. But if you're spending a lot of money on product that's going to have a long time before you reorder or whatever, then it starts to be making things more complex in your accounting to see how you're doing.
Can I ask a direct question that I know there's not always a direct answer to, because this tends to be nuanced based on everyone's circumstance, but can you give us like maybe like our revenue level? Like if you're making X a year, you should start to think about other methods in cash. And if you're making below, cash is typically sufficient.
I think if you're starting to sell at a level where you're going to be hitting 100,000 in income in a year, then theoretically that could leave you just with what we see in numbers with $30,000. That's enough money to start to be serious about. And if you're making an investment in products or whatever, when it starts in your mind to become less of a gamble and more of a direction you're headed, then that's the place to do it. But certainly if you're spending $100,000 or getting $100,000 in revenue, you're getting into some real numbers there. And I would want more visibility if it were my money.
Awesome. So on to the next accounting method, modified cash. Just to recap the high-level overview that Cyndi provided earlier, modified cash uses aspects of both cash and accrual accounting. It allows you to handle your operating expense transactions using the cash basis, which is the one with less administrative burden, and your revenue and COGS using the accrual basis in order to give you a good comparison of the cost incurred for the revenue generated. And this is likely the type of method that is going to remove some of those swings that we saw in the profit and loss statement, which we'll provide an example of a little bit later in the presentation. But beyond that, Cyndi, can you talk about a little bit more of the pros related to the modified cash basis method?
Well, the primary thing that you want to understand is profitability. So being able to see how much money you get in a particular period, and have that leveled out month by month so that you don't have these swings with Amazon's, every 2 weeks deposit schedule, but being able to see how that revenue comes in and then compare it with what the costs are for providing that product to meet that sale. That's where you see profitability, and being able to understand profitability is the key thing here. And so that gives you visibility into your business performance. You're not having to keep up with all the aspects of accrual down with the operating expenses. So we've talked about the burden is less for keeping track of those things. And if your business is growing, this is a way you can add a little bit of complexity, getting some real data you can use to manage your business without going to the full complexity of an accrual methodology, and can save you some cost as you're making that transition as you grow. And as we've talked about before, there are specific reasons why you may have to do accrual accounting. And one is that the IRS in the US anyway, the IRS requires that if you've achieved a certain level, 25 million in revenue over a 3-year period, then you need to be on an accrual basis, a completely accrual basis for your accounting.
What's the upper echelon of people that you see transitioning away from modified cash into accrual? Like what type of annual revenue are they making?
Well, for us, we see clients, and it's interesting. I've had a client go from 0 to 33 million in about 18 months. It just kind of blows your mind. But at the point where they're starting to get in the 25 to $30 million range, they're ready to start bringing accounting in house. They're looking for more. They've got investors, etc. So they need more of an in-house function to be able to manage their accounting, and accrual is what they need also because of the IRS requirements.
Yeah, probably also upgrading to NetSuite, moving away from tools like Xero, QuickBooks, so on and so forth.
Exactly. Yeah.
Totally makes sense. So it feels like the band in which modified cash is relevant for is quite large, right? You had mentioned the lower echelon is about $100,000 in revenue, and then the upper echelon, obviously because of the IRS requirements, is about 25 million. So modified cash is well suited to a lot of businesses in that middle range.
Yeah.
Again, though, I just want to be clear. Sometimes accrual is the right method. It really depends on the circumstance, but would you say that modified cash can apply to most businesses within that range?
We found that it works well for most of the ones that have come to us. Now there are, situations where if they've got an investor or something and they want something beyond that, we'll go to full accrual accounting, but it's a little more costly. So if you don't have that requirement, why pay for something that you're not going to spend a lot of effort on,
Totally.
diving into the numbers that don't really help you make the business decisions.
And speaking of the numbers, let's look into a profit and loss statement with modified cash applied. Do you mind talking to us a little bit about what we're seeing here in this new environment?
Well, the big number in January for revenue is kind of spread out because I'm assuming some of that third payment that the seller got in January probably related to some December activity. So that got recorded in December. And so the activity for the 31 days in January is what's reflected in January. But the real big change here is what's going on with the cost of goods sold. So we see that in January, even though this seller did not buy any inventory in January, what they did was using the modified cash or an accrual treatment for their cost of goods sold. They recorded how much that of that revenue that came in January really related to paying for that product that they sold. So roughly $700,000 here as it relates to that 1.4 million in income. Whereas in our cash basis, they didn't buy any inventory, so it was zero before. So what it does is it gives us much more understanding of how our business really performed in January, what sales actually took place in January, and what it cost us in products to meet that demand. And our net income is spread out a lot more evenly over the 3 months because we are looking at truly what it cost us to meet the demand for the product that we sold in those months.
Yeah, I love that. A, this takes the swings out of the equation, and B, we talked about kind of that administrative burden on the back end if you need to dig in, but you can kind of see at face value, advertising costs have stayed relatively constant as compared to our gross profits. But like in a world in the cash basis method where you're buying a lot of inventory and you're looking at negative gross profit on any given month, it's hard to tell, like if my advertising costs went up or went haywire. And that's happened a lot over the last few years with iOS 14 updates, cookie blockers, so on and so forth. Like advertising is a really tough nut to crack for a lot of e-commerce businesses. This, I would easily be able to see kind of like what the fluctuations are and the impact that it's having on my gross margins in this environment versus in the cash basis, which we'd have to do a little bit more administrative work on the back end to kind of get that visibility required.
Yeah, if you're making an investment in advertising, you want to see that revenue number benefit from that investment, right? Yeah, you don't want to be wondering, is it because I got a third payout? You want to know, is it because I actually spent these dollars and they were working for me?
Yeah, awesome. So we talked about this a little bit earlier, like what businesses are best suited, but Cyndi, just to confirm, over $100,000 in annual revenue, under 25 million works for most.
That's a good
setups.
band. Mm-hmm.
Yeah, with the exception of people that have external investors or external investments.
Yeah.
Cool. Speaking of modified cash, one thing that we see quite a bit is that when people are making the transition from cash to modified cash, there are a few areas where they're not necessarily set up for success. One is they're not working with an expert e-commerce accountant that can help them with the transition, which is always good to do so. Bookskeep is one example, but the A2X team has access to a ton of other e-commerce accountants and bookkeepers as well, depending on your region and on your needs, available on the A2X website. But then also tooling. Amy, do you want to talk a little bit about one of the mistakes that we see a lot of businesses make as they make this transition to cash, to modified cash or accrual?
Yeah, definitely. So one of the biggest mistakes we see is sellers coding their whole deposit as sales. So this is kind of applicable regardless of the accounting methodology you're using. So what we often see is sellers will receive a payout in their bank account. So for example, here, this Amazon seller has received a deposit. So Amazon pays out their sellers every 2 weeks. So as Cyndi has said, it's highly likely that this might have covered 2 months. So it might have been some December payout and some January payout. So if they were to code this whole deposit to just a sales account, they wouldn't be getting this visibility and they wouldn't be having those accurate numbers going through into the financial statements that Cyndi has been showing. So just in this example here, you can see that the 52,355 is not the sales amount. On the right-hand side there, you can see the deposit broken down accurately. So it gives you a lot more visibility around all of your expenses, all of your income, what was sales, advertising, as we've discussed, discounts, all those sorts of things. So this is the way that you can break down your data to get that visibility. So one of the reasons that people avoid doing e-commerce accounting is because it's actually really challenging. So why is it bad? One of the main ones being that it covers a long period. So sellers might get paid, as we've mentioned, if they got paid, and for example, if they got paid today, the majority of that sales would have been in January. They've got a lot of different transactions to account for. So in the example that I had on the left, you could see that the seller was just coding sales, but those deposits includes sales and fees and taxes and all sorts of things that you need to accurately be accounting for to get visibility into how your business is doing. And then the third one there is tax. So tax can be complicated for a whole number of reasons. Whether you're selling overseas, whether you're selling in different states, you might have products that have different tax rates. And then the other one being that if you sell on Amazon or some of the other marketplaces, there's marketplace facilitator tax, which is when Amazon collects your tax and actually remits it on your behalf. So that might seem really nice and straightforward, but you've also got to account for that, and it's your responsibility to ensure that that is all done correctly.
I love this slide. It makes me laugh. Why is that bad? And then there's the comment above. I was like, why is that bad, Amy? Like, why is that
I know. I was gonna make a joke and say it's not me that makes it bad, but yeah, there's lots of reasons.
don't blame you.
But,
maybe better phrasing is why is it hard, right? Like, why is it hard to transition from cash to modified cash or accrual? I think like one of the next pieces is you're going to talk about the solutions that are available. Obvious plug on A2X.
Yeah.
Do you want to talk about what makes it easy?
Absolutely. I mean, I guess it's not all doom and gloom, and this whole challenging or difficult e-commerce problem is the whole reason why A2X exists. So A2X can automate a lot of this for you. You can use it on a bunch of your different e-commerce platforms, and essentially it automates the process. It's really accurate and it will save you a lot of time. So it lends itself really nicely to particularly modified cash and accrual.
Yeah, essentially that example that Amy showed, which was, the deposit from Amazon, but that deposit actually made up a bunch of individual transactions. A2X will just pull that in and break out those transactions for you and post it to your accounting software. So saves a ton of time. And Cyndi, what was interesting too, is you were talking earlier that it's not just a benefit to modified cash and accrual. It actually also adds value to cash counting as well.
Yeah, I mean, really A2X's tool does put you into a modified cash or an accrual basis. But if you are recording in the way that Amy showed with the one sales deposit on the left-hand side, even if that's what you're doing from a cash basis, you're really misrepresenting what's going on in your business. And the big one is if you put this 52,000 in as sales, which is what a lot of folks do, you're overstating your income by almost, well, what is it, $13,000. And so when you go to report that to the IRS, you're going to be paying taxes on $13 worth of income that you didn't actually receive, and nobody wants that. I mean, the actual sales, was a good bit less than that. So So breaking it out, even if you're doing it yourself and using a cash basis, you want to break it out so that you're not misrepresenting what your sales are, because that's going to hurt in the pocketbook.
And one of the other cool things about transitioning to modified cash is not only does it give you better line of sight into your money, but it also unlocks opportunities to use other mechanisms or methodologies to help you run more successful businesses. We talked earlier about the profit first methodology and how it's helped businesses. Cyndi, do you want to talk about profit first and how profit first gets unlocked in a modified cash world?
Yeah, I'll be glad to, and I'll try to keep it short because I know we're running tight on time here. When you move to modified cash, you are getting you're giving up being able to look at your P&L and understand kind of what your bank account. You're giving up the ability to see your P&L and your bank account kind of be in a line with each other. So the way we work with our clients is using a methodology called Profit First that helps you have that better visibility into your cash situation by using bank accounts for specific purposes. So your online banking dashboard really kind of becomes another tool for you to manage cash in your business. Profit First is complex. I teach a whole course on it that takes several weeks to go through.
You've even written a book on it, right?
Yeah, I wrote the book on it for e-commerce businesses. So the beauty of it is that it works with our behavior that we have already, which is logging in, seeing what our bank account tells us. But we get more sophisticated by having multiple bank accounts for specific purposes. And as we understand how cash is flowing through our business, that online banking dashboard really informs us as to how things are going in our business even quicker than we can get through financial statements. And so I think that's a reason that, as you're getting more sophisticated in your business, implementing a tool like Profit First will also be a way to stay more in touch with the cash, even though your financials are getting a little bit further away from it. We've talked about the rainy day fund, putting money aside for situations like Amazon losing inventory, etc. It also helps you as you're planning for growth or setting aside money for taxes. All of these are bank accounts that we create, and we set money aside, much like our grandmother may have done with an envelope. We're doing it with bank accounts. And the nice thing is that as you're setting that money aside for specific purposes, it's putting pressure on your operating expenses, which is a good thing because operating expenses can get bloated over time. Yeah. And so by putting pressure on that, it forces us to be more efficient, to be more frugal, and to be more innovative. And all those things are good drivers in our business.
It also lends itself really well to this new zeitgeist, right? 2020, 2021, growth at all costs. Mm-hmm. Right now, in the current period that we're in, it's about profitable growth. Profit First helps you achieve that outcome a lot easier. And if you have any questions about it, Bookskeep is as mentioned, one of the top experts on the subject, especially as it relates to e-commerce businesses. Cool. So the last accounting method, accrual, just a quick recap on this one. I'm sure that most people are familiar, but records transactions at the time sales were made or orders raised, even if the money hasn't changed hands yet. It focuses on the movement of value as opposed to immediate cash handling within a business. So in this context, it's not only are you doing an accrual on the sales and on the inventory and the COGS, but you're also doing an accrual on all of your operating expenses as well. Cyndi, do you want to talk a little bit about the pros and cons of accrual?
Well, the pros are very similar to what we said with modified cash. You get all those benefits, but it's also a requirement for some businesses. So be sure you understand if you're in that area where the IRS would require it. It also will give you the good data for sale if you're selling your business, so your valuation will be good, just like with the modified cash. So many of the benefits from modified cash carry over, and if you're in that larger size business, it may be a requirement. The reason why you might not want to go full accrual is that it does take more effort, more time, and the administrative effort just may not be necessary for what you look at and how you make decisions. if you're using profit first, it's putting pressure on operating expenses already, and you see that much more quickly than you would in your financials. So, marrying up profit first and modified cash kind of gives you the best of both worlds without as much bookkeeping headache.
And you know what? I have the profit and loss statement for accrual on its own, but I think it looks really good when you put it beside cash and modified cash to start to see the differences between the three. And one of the things that you mentioned on accrual and modified cash is there's more of an administrative burden, but sometimes it's like a marginal difference or marginal improvement. And I think this slide really demonstrates that. Do you want to talk through the differences between cash and modified cash and accrual in terms of what we're seeing on the P&L?
Sure. We've kind of looked in detail at the cash basis for income and for modified cash. You can see if you look at the accrual, there's no change there because we're doing accrual treatment of income. The same is true for the cost of goods sold. You see a big difference in the cost of goods sold in cash and in modified cash, but in accrual, you're not seeing that, that swing. It's the same. The only change really, if we look down into the operating expenses, is with the insurance. Now, there will be changes that you may have unique to your business, but just for a point of illustration here, oops, I lost it. I've got it blown up on my screen because I can't read yours. So on insurance, the full amount of the insurance was paid in January, and that's for the whole year. That's $2,300 for the insurance line, but you're getting value and benefit of insurance for the whole year. So in an accrual basis, you would spread that $2,300 out over the life of that policy, which typically be about a year. So you would take that $2,300, divide it by 12, and then book the amount that relates to that month in that particular month. The bottom line is, if you look, there's just not much difference between what happened in the modified cash net income and what happened in the accrual. Sometimes that visibility is important for you. It may be important because you have investors that want to see it at that level of detail. But if it's not really something you use for making decisions day to day, then why go to that headache of trying to do full accrual when modified cash is going to give you what you need to be making decisions? As business owners, we have so much to pay attention to. We need to spend our time on the things that are going to get us the most results. And most of the time, accruing operating expenses is pretty down on the list.
So it's interesting, like it keeps coming back to modified cash. We said it earlier in the presentation when Amy asked that first question for scaling businesses. Modified cash is likely going to be the best fit for most businesses. And I think that we covered it really well in the webinar, and by we, I mean you and your expertise and your experience. Cash doesn't give you the line of sight and the visibility that you need, but it's super simple. Accrual gives you the visibility that you need, but it's quite administrative. Modified cash gives you the visibility without the administration. So ultimately the best of both worlds to run a more efficient and scalable business. And it kind of brings you back to the main point is, like, cash, although sufficient, doesn't give you the line of sight. And especially when you're running a business, especially when it comes to cash flow, especially when it comes to profitability, close enough really isn't good enough. And picking the right accounting method for your business at this particular stage is of critical importance. So now, just to kind of like take it all the way home and then pass the floor over to all of you who have questions and linking up those questions with Cyndi. What are the next steps, right? Like, how do you go from where you are today to one of these methods, depending on the one that's best suited for your business? First and foremost, if you have an in-house finance person, speak with them about your accounting methods and let them know how A2X can help accurately automate the reconciliation process and help you transition from cash to modified cash. A lot of the times why people kind of delay that process is because they don't have the appropriate tooling to make it work. And what we showed is it's not always easy. On that slide where Amy, why is that bad? settlement settlement periods can cross multiple weeks, multiple months. You don't have the line of sight that you need in each individual transaction. Add some layers of complexity on tax. The second thing is ultimately, I think one of the most, if you don't have an internal resource, like an accountant or bookkeeper, really important to work with an accountant or a financial advisor. Bookskeep is an example of the top e-commerce accounting practices that are available in the A2X directory. So definitely jump over there, connect with one of those practices, Bookskeep included, and work together to figure out what is the best method for your business and how to move forward to get to that outcome. And then on the last but not least, if you're still kind of early on in your journey and you want to learn a little bit more, the A2X website has a ton of resources available to you to help you continue down this path. So please take a look. All the content is available on our blog or the e-commerce accounting hub. So before we get into Q&A, Cyndi, I just want to say thank you again so much for lending your expertise for all of us here. I think your insights were incredibly valuable. So thank you so much for taking the time.
Thank you for having me, Jeff. I enjoyed it. Thank you, Amy.
So Amy, do you mind if I pass the mic over to you to flag some of the questions that have come up?
Definitely, yeah. We've had a few come through. So one that we answered earlier on, and that was for scaling businesses. The next question that we've had, and I think this is possibly relating to the example that you shared, Cyndi, of your client who had all those unfortunate situations. And the question is there insurance available for retailers, i.e. Amazon, for things like inventory losses, suspensions, and things like that?
Yes, so my understanding is there is. The person that I know that does insurance for Amazon sellers specifically is Ashlyn, ASHLIN, I think. Ashlyn Haddon Insurance. She's got an e-commerce insurance agency. So she's where I would start. There may be others out there. She's just the one that I know several clients are using and have had good results with. So I would touch base with Ashlyn Haddon. She's got I know some websites with good information on it as well. So look her up.
Awesome. Always when we have these conversations, always really drives home the value of actually having an e-commerce accountant, because I was thinking to myself, I was like, I have absolutely no idea if there's insurance for things like that, but these are the things the experts knows. Yeah.
And there's lawyers that help you get out of those sticky situations too. So
oh gosh, good to know. The next question is, with modified cash, do you run reports as accrual or cash basis? For example, QBO gives you the options to run reports on either.
Well, a lot of it depends on how you're putting data into the accounting system. And if you're using things like the inventory tracking in your accounting system versus inventory tracking maybe through A2X or through another 3PL or something like that, you would be safest. The safest answer I think I can give you is to say run them on an accrual basis. But for most applications, it matters how you put the data into QuickBooks. So you might not have to run it on accrual basis. You may get the same information if you run it on a cash basis, but not knowing the full details of the situation, I know accrual will get you where you need to go.
Nice. Awesome. And then we've got another question that's come through, and it said, is the page we saw that itemized as Amazon deposits an example of the A2X reconciliation? That would be helpful to see how A2X is helpful.
That's your example, Amy.
I was just about to say, I'm happy to take this one. So
yeah, that's yours. So.
Tell us about A2X.
Wait, Amy, did you ask that question?
I made that one up myself. No, I swear it's legitimate. So yes, the example that we shared earlier is how A2X would split out the data. So on the left-hand side, it was just a seller that would code the whole deposit to sales, and on the right-hand side, that's the information that you would see if you were using A2X. So A2X will split out all of the different transaction types. It will actually also split it out into the month that it occurred. So if you had a deposit that covered 2 months, you'd get 2 entries from A2X. So it's following the accrual methodology. So that's your transactions in the correct period. But if you are interested, we're more than happy to give you a specific demo of A2X. We can include that in the follow-up. if you're interested in seeing how A2X works. The purpose of today was we really wanted to dive into the cash versus accrual versus modified, but always more than happy to give you more information about A2X as well.
And if I could follow along with that just a little bit, Amy, one of the reasons as an accountant we work with A2X is because you guys are accurate from an accounting standpoint. And one of the challenges that we hear over and over with clients is we present them their books after we've done their cleanup, and they're disappointed because their sales are not what they thought they were. They've been using another dashboard type tool. And the challenge with that is that the tool that they're using is pulling data out of Amazon at an order level as opposed to at a sales level. And that's not accounting, that's not the correct accounting treatment. And this was a little problem until we hit 2020. And then all these people went online and placed orders, but then they didn't actually take delivery because Amazon had a big backlog. And then at some point, Amazon said, hey, do you really want this? And then they got canceled. And so then it was thousands, tens of thousands of dollars that our clients thought they were getting because it showed up on an order report in their dashboard, but that it was not the correct accounting treatment. And then those dollars were washed away because it truly wasn't a fulfilled order. And so for that reason, these dashboards are useful for a certain perspective, but they're not useful from an accounting perspective. And when you're basing your decisions on what you're seeing in a dashboard that's looking at orders as opposed to true sales, then you're setting yourself up for possibly having a situation where those numbers aren't in alignment with what really happens with money that hits your bank. And so when we made the decision to use A2X in our practice, it was because we saw the rigor that went into developing a tool that went all the way back to what is being put in the bank and how it corresponds to what is actually happening at the sales level in Amazon. And so, you know, that's the reason we use A2X and find that it's a tool that can be counted on. But it's also a red flag if you're seeing something in a dashboard and then suddenly it's not matching your accounting system, or you invest in an accounting system and then realize you're getting different data. That's very often the cause. The dashboards are not going to the actual proper place in Amazon to get accounting information. They're simply pulling out orders, which can change.
Definitely. And
sometimes when people work with you, instead of being disappointed at their numbers, they are pleasantly surprised.
No.
Does that ever happen sometimes?
No.
Sometimes?
You know, it's unfortunately, I don't see it the other way very often. I see these dashboards typically overstate. And then, you know, I'm giving the bad news of, sorry.
I'm teasing.
That's, I guess, the downside of those batch deposits, right? They can also include things like tax and
exactly.
And I think going back to the whole purpose of the presentation, that's why cash accounting doesn't necessarily work that well for e-commerce, because you're often paid far later than the transaction happened, and there's refunds and returns and all sorts of things that are far more difficult to track than what they would be.
Yeah, after the fact. Yeah.
Cool.
Brilliant.
So that seems about it for the Q&A section. I just want to say thanks again to everyone for joining the webinar. Cyndi, thank you for your expertise. Amy, thank you so much for the overview on A2X and for supporting on the Q&A section. Hope everyone has a wonderful end to their day, and we'll talk to you soon. Expect a follow-up email with the webinar recording, as well as some of the resources we talked about, the quiz, and then also more information on Bookskeep, Profit First, and more. So talk to you soon. Bye.
Thank you, guys.
Thanks a lot.